Good afternoon, everybody. My name's Aaron Sheldrick, and I work for Reuters. We're in the middle of one of the most hotly contested election campaigns in the last 2 years, and we're lucky to have someone who can shed light on what comes next once the polls close and they're counted on Sunday. Paul Sheard is Chief Global Economist and Head of Global Economics and Research at Standard & Poor's Rating Services. He's based in New York, but has had many years' experience in Japan and can give us a perspective from outside that perhaps others can't. So Paul is going to speak, make some brief opening remarks, and then we will open the floor to questions. I'd like to remind everyone to please turn off your mobile devices. Thank you very much. Please, Paul.
Oh, thank you very much. Thank you.
Sorry, that's good.
Thank you very much, Aaron. I'm always very impressed by this maneuver where the podium appears out of nowhere. So it's great to be back here at the Foreign Correspondents Club of Japan. Tremendous venue with a lot of history. So I'm very pleased to be here, I think for my second time this year. So Japan is certainly in the limelight, and with the election that's just been called. So I'm not sure how much sort of crystal ball gazing I can actually give you on what's going to happen, but I'll give you my sort of take on what I think is going on with the broader policy arena in Japan. Certainly, the snap election that was called by Mr. Abe caught me by surprise. I think caught most people by surprise. Given that it's coming just halfway through the 4-year term. So, for a while there, I think a lot of us were scratching our heads trying to figure out exactly why this was happening and what motivated it. Given that Mr. Abe already has, or the LDP Komeito coalition already has a very large majority following that landslide victory at the last election, it didn't seem like the normal sort of political logic was at work here. That is, normally when you're in a Westminster-style system, I come from Australia, so familiar with this kind of system where the Prime Minister is able to call an election and dissolve the lower house. Usually it's done when there's a sort of a moment of political opportunism where the government is able to essentially increase its majority. So it was a little bit puzzling because when the election was called, most of the commentary seemed to be, well, the LDP Komeito will probably lose 10, 15, maybe 20 seats, but they'll still have a solid majority. It sort of begged the question, well, if you're going to lose seats, why would you actually call a snap election? Now some of the commentary seems to be actually saying, well, gee, maybe they're going to hold on to the majority, maybe even increase it. So we'll have to see how that plays out. Now, Mr. Abe is ostensibly sort of the hook that he used to call the election, as you know, of course, was the decision to delay the second stage of the consumption tax hike due for October of next year, to kick that out to April 2017, a year and a half, but then to commit to the implementation and not to make that conditional on the state of the economy. So that's a slightly, again, when I saw that, I thought that's a thin reed to hang this early election on, given that the decision on the consumption tax hike was being made within a legislative framework which actually required the Prime Minister to make such a decision. So it's a little bit odd that making the decision would then be the trigger to go back to the electorate, because the existing legislative framework, and I'm referring here to the August 2012 consumption tax legislation, already had embedded in it a framework essentially that said the Prime Minister will have to make this decision in 2 stages over time. So that didn't seem to make a heck of a lot of sense. I think when I've reflected on that a little bit more, I think there is a kind of a little bit of a veneer of plausibility, in a sense, that Mr. Abe is able to make here, to be able to say, look, this is a big decision on the consumption tax hike. Not so much the delay per se, but the pre-committing to April 2017. And this is the sort of issue on which the people of Japan should have a say. So I think he's got a little bit of a veneer of plausibility, but I think we have to assume that this is very much a politically opportunistic decision. But again, under a Westminster framework, the Prime Minister has that liberty, and you do expect them to use it to their own political advantage. Now, I want to make sort of just 3 points in my introductory remarks here in terms of sort of conclusion of how I think this is all going to play out net. The first observation I'm going to make and develop a little bit is that this is the first time, one of my takeaways here is that really we're seeing, at least I'm seeing, for the first time, a sense that Prime Minister Abe is really exercising his own political leadership here and moving off the script that perhaps was there beforehand. I'll come back and explore that point in a moment. The second point, as an economist looking at Japan, that I would make is that net-net, with the Bank of Japan's move at the end of October and then the decision to delay the consumption tax hike, for the first time for some time now, that the policy mix, the macro policy mix, will actually be quite conducive to Japan successfully getting out of deflation. Now, whether Japan is actually able to exit deflation once and for all, I think that's still somewhat debatable, but certainly this gives the best runway, if you like, to achieve that we've probably seen, because monetary policy doubling down by the Bank of Japan, combined with a fiscal runway out to 2017, that's really clear of any obstacles in the way of a consumption tax increase. So that's a positive. The third point that I'll make is more around the sort of structural reform agenda. Again, it's very difficult to have a clear view of exactly what Mr. Abe is going to do, but assuming that comes out of this election with a strong majority and a strong mandate for Abenomics, the first and the second arrows essentially now are pretty much taken care of, and it really is all about the structural reforms. And given that he will have a 4-year runway, I'd certainly expect that the whole third arrow, structural reform agenda, will actually gain quite a bit of momentum. I wouldn't be surprised if Mr. Abe actually pulled a few rabbits out of his hat at some point and really breathed some life into the third arrow, but we'll have to wait and see. So let me come back and develop this thought about Mr. Abe exercising political leadership here in a way that we haven't really seen before. What do I mean by that? Well, there's a sort of a bit of a stereotype in Japan that the bureaucrats kind of run the country, the politicians are involved more in sort of divvying up the spoils of power. But that really it's the bureaucrats who are running the country. They're the ones with the power. It's a strong narrative in Japan. And actually, if you'd been looking at the development of Abenomics and policy developments in Japan over the last 2 years, up until Mr. Abe made the decision on the consumption tax, that thesis seemed to have a lot of explanatory power. Now, what do I mean by that? As I discussed at some of my earlier presentations here, Mr. Abe made a big splash with Abenomics, the 3 arrows. But actually the genesis of Abenomics was in the 2012 consumption tax legislation. And of course that was passed under Mr. Noda, the previous legislation. Because in that legislation, and as a result of the very vigorous policy debate that happened in the first half of 2012, essentially what that legislation did was to authorize the government to be able to double the consumption tax in 2 stages. But it didn't compel the government to do that. In fact, it compelled the government, before it took the action to raise the consumption tax, to ensure that policies were in place that had put the Japanese economy on a different macroeconomic path, that is, a path where it could absorb the impact of the consumption tax and still achieve 3% nominal GDP growth. And these numbers were written into the legislation that over the decade 2011 to 2020, policies would be put in place that did two things: ended deflation and raised Japan's real growth, so that nominal GDP growth on average would be expected as a result of these policies to be 3%. That would be comprised of a 2% real growth and 1% positive deflator. And so in other words, the onus was on the government to, whichever government was in power, to make sure that policies were in place that created that expectation. If those policies were in place, then it would be okay for the government to proceed to hike the consumption tax. Now, these are very, very challenging and aggressive numbers here, 3% nominal GDP growth. Well, over the prior decade, prior to that consumption tax legislation, nominal GDP growth in Japan had averaged minus 0.4. Minus. So essentially what the legislation said is, okay, government, you can double the consumption tax, but before you do, put in policies to engineer an almost 3.5 percentage point increase in nominal GDP growth, again, by ending deflation and raising real growth. Well, ending deflation and raising real growth is just Abenomics. That's what Abenomics essentially is, the first three arrows. So I've argued that the genesis of Abenomics was really in that consumption tax legislation passed under the previous government, of course with bipartisan support, with the LDP and the Komeito. Now, Mr. Abe, but very cleverly, of course, when he came back as the LDP president in September 2012 and then fought the election in December 2012, very cleverly was able to package this Abenomics policy mix, breathe a lot of energy into it, get a lot of attention internationally. So it looked like it was all being driven by Mr. Abe, but really it was part of the predetermined, in a sense, policy mix that the policy elites in Japan had decided to implement. But he did his job very well. Now, in this interpretation of what was going on, the really key point here was to put in place policies. Raising real growth is a difficult kind of thing with structural reforms. Structural reforms take time to develop, they take time to implement, and they take time to show the fruits of the labor. But ending deflation is something that, in theory, is possible if you have the right macro policy mix. If you have a central bank that is determined to end deflation, and you have supportive fiscal policy, that is something that, in theory, should be possible. And again, what I've argued over the years is that ending deflation in Japan, if you're concerned, as many people are, about Japan getting its fiscal policy on a sustainable long-term trajectory, the first step towards fiscal consolidation has to be ending deflation. By the way, why would one be hung up on something like ending deflation? Why is that important? I mean, to an economist, it's kind of obvious, but let me just give you a number if you're scratching your head. Even today, with a recovery in Japan for the last couple of years, the level of nominal GDP is about 7% below its pre-crisis peak, or its all-time peak, which was the fourth quarter of 1997. So net-net, over those 17 years, nominal GDP in Japan has shrunk by 7%. Most of that is due to deflation, because the GDP deflator has fallen about 17% from its peak, which was 1994. If nominal GDP is shrinking, that is a very bad macroeconomic environment in which to be trying to operate your fiscal policy. If you look at a debt to GDP ratio, if your denominator is shrinking and your numerator is increasing, you're in a pretty bad place. Whereas if your denominator is increasing, for example in the US, in the same period in which Japan's nominal GDP has shrunk 7%, the US nominal GDP has doubled, 100% increase. That makes it much easier to get your fiscal conditions, your fiscal situation under control. So ending deflation should be the first step to fiscal consolidation. From that point of view, and from the logic of the consumption tax legislation, and from Abenomics as articulated itself, I think you can make an argument that actually Mr. Abe should have, or would have been quite justified in deciding not to hike the consumption tax in April of this year. Now that's a decision that he made in October 2013 with a lot of fanfare. He said, no, the conditions are such that it's okay to proceed with the consumption tax hike. Now what happened in retrospect, of course, is that it wasn't okay. The economy, as many economists expected, picked up in the first quarter, but then in the second and the third quarters of this year fell down again. And if you look at the level of real GDP relative to the end of 2013, it's still about 0.7% below that end of 2013 level. So the net result of the increase and then the fall off has been a shrinkage of real GDP. Again, if you're trying to end deflation, which has been going on for 15 or 20 years in Japan, you don't want to be engineering a contraction in real GDP. That's the opposite direction that you want to be going in. So you could argue that Mr. Abe actually, and I kind of argued at the time, would have been fully justified to have said, given the legislation and given the spirit of Abenomics, now is not the right time to hike the consumption tax. But he didn't. And he went through the normal process, essentially, of taking his advice from the bureaucracy and the officials. That is different this time. Mr. Abe appears to have been once bitten, twice shy, and now resisted the policy advice of Ministry of Finance, the Bank of Japan, and said, no, I'm going to override the official economic advice I'm getting here and not hike the consumption tax for another 18 months and make sure that Japan achieves this important goal of exiting from deflation. So I think that's an interesting sort of takeaway here, that there seems to have been a change here as a politician in the way that Mr. Abe is operating. Now that brings me to the second point, which I'd like to make, which is about this prospects for Japan to be successful in getting out of this long-term deflation. Now, as you know, the Bank of Japan at the end of October surprised, there have been a number of surprises recently, but surprised most observers, most Bank of Japan watchers, by engaging in so-called QQE2, a sort of a doubling down of QQE, quantitative and qualitative easing. And it was quite a bold move that the Bank of Japan made at the end of October, increasing the expansion of the monetary base, which had been at 60 to 70 trillion to 80 trillion, but then increasing to achieve that expansion of essentially the Bank of Japan's balance sheet, to increase its JGB purchases from 50 trillion to 80 trillion, long-term JGB purchases, but then to extend the duration of the JGB purchases from around 7 years to 7 to 10 years, and then to treble the amount of ETFs from 1 trillion to 3 trillion, and to treble the amount of J-REITs that it was purchasing from 30 billion to 90 billion. So if you add up those decisions of the Bank of Japan on the 31st of October, it was sort of, a very bold Mr. Kuroda round two. Mr. Kuroda surprised the world on the 4th of April last year, and he surprised the world again this time. But the Bank of Japan's policy moves and the Bank of Japan's own forecasts for growth and inflation over the next couple of years were predicated on the government proceeding with the consumption tax hikes, 8 to 10% next October. Now that increase in the consumption tax would have been a contractionary force for the economy. So the Bank of Japan was saying to Mr. Abe, look, here's a down payment in terms of more aggressive monetary policy. Essentially, when it comes to ending deflation and making sure the economy recovers, we have your back. Go ahead and hike the consumption tax. Well, in the event, Mr. Abe decided not to hike the consumption tax. But that very aggressive monetary policy from the Bank of Japan, which has, among other things, led the yen against the dollar to weaken from about 112 now to about 120, and has also put further upward pressure on the stock market here. That very aggressive monetary policy is now still in place, even though it was predicated on a fiscal tightening. That fiscal tightening, on the other hand, is not going to happen until April 2017, which is well after the point at which the Bank of Japan is aiming to have ended deflation and secured 2% inflation. So again, as an economist, looking at what's happened in Japan in the last 6 weeks and adding it all up, regardless of what you think of the politics here, this has actually resulted in a reflationary or a macro policy mix, monetary policy and fiscal policy, which is much more reflationary and therefore conducive to Japan achieving success with that attempt to end deflation. Now, again, whether it will be successful or not, that's another debate. But the probability, the prospects for it to be successful, I think have increased fairly significantly. Let me come to my third point then, which is around the structural reform agenda. And I don't want to get into the details of this too much. I'm sure the people in this room who live and breathe this thing every day will have their own ideas about how the structural reform agenda is going. But I think it does, again, the election does augur well for the structural reform agenda. And the reason for that, one of the prime reasons for that, is that, again, when I scratched my head and tried to figure out what does Abe gain by this early election, given what we talked about before, that it didn't seem to be necessarily driven by the expectation of increasing the majority that the coalition has, although that might happen, but that's a bit of a surprise, will be a surprise. So what's the political logic here? And when I thought about it, and what sort of came to me, and I think I've seen some other people with a similar analysis here, is that what Mr. Abe gets from this is essentially lining up the electoral cycle with the remainder of his likely term as the Prime Minister. What does that mean? Well, as you know, the LDP, under the LDP rules, the LDP president gets 2 3-year terms. Now, you could imagine a scenario where those rules got changed, but if we take those rules essentially as given for the moment, Mr. Abe has served 2 years of the first 3-year term, and then in September 2015, presumably, will get re-election for a second term of 3 years. That means he can really be Prime Minister through till September 2018. By holding an early election now, of course, assuming he wins, which presumably he will, then he will have a Prime Minister, he won't have to face an election for 4 years, December 2018, and those 2 cycles are more or less lined up. Now, if he hadn't had an early election now, what would have been the situation? Let's say that this Parliament had gone the full term, then in 2 years' time, he would have had to face an election, and then, assuming that he won that election, he would only have 2 years in which to implement, whatever mandate he received at that election. So this is all, obviously, this logic sort of is rather self-centered and revolves around sort of Mr. Abe's, political ambitions to a certain extent. But there is a certain amount of logic in getting the election over and done with now, getting a strong mandate for Abenomics, and then having a four-year uninterrupted term in which to prosecute that agenda. If you sort of think about it, that Abe was always going to get 6 years as Prime Minister, because 6 years as LDP President, there's sort of 2 ways of doing it. Serve for 4 years, have an election, and have 2 more years left, or front-load the 2 years and then have 4 years at the back end. 2-4 makes a little bit more sense, I think, than 4-2, although it doesn't maybe make that much sense from the viewpoint of the people of Japan. So, again, net-net, when you think about it, we get this election out of the way. If you're going to have an election like this, you probably want to get it out of the way in a season like the Bornenkai season, the end of the year. Obviously, if it was January or February, it would be a different matter. So if we get into January or February next year, Mr. Abe has got a strong mandate to continue with Abenomics. He has a clear 4-year runway. He has the first and the second arrow more or less taken care of. Obviously, the first arrow delegated to the Bank of Japan, and the Bank of Japan, I think, more or less doing the right thing when it comes to the first arrow. The second arrow, the consumption tax, pushed out now to April 2017, but essentially locked in as happening at that point. So there's a little bit of a sort of a down payment on fiscal credibility by pre-committing to April 2017. It's kind of taking care of the first and the second arrows. And then I think the focus can then shift back to the third arrow of structural reforms. Now let me just finish up by saying a few things about the third arrow. I think my main point I'd make here is that when I listen to the commentary and talk to people and around the world as I rove around the place, there seems to be a consensus that the third arrow is a disappointment, there's nothing there, nothing's happening, etc. And I think that's actually a gross simplification, probably mischaracterization. Certainly, as an economist looking at the third arrow, if you asked me, look, Japan is trying to raise its real growth, its real potential growth, substantially from, at the moment, about 0.8% on average in the last 10 years to 2%, against a backdrop of very adverse demographics, a shrinking population. For example, over this decade of Abenomics, of the attempt to raise nominal and real growth, the workforce is slated to fall about 1% per year, about 0.9% per year. So that's just already taking about 1% off your potential growth. So you have to compensate that with something else. So this is a very ambitious sort of set of aspirations here to raise real growth to 2%. You could argue it's totally unrealistic. I'd probably agree with you, but that's what is on paper. So if you said to me as an economist, what does the government need to do to shift the dial on real potential growth? You really have to tackle the population problem, the demographic problem. You have to have a serious discussion about immigration. You have to have a serious discussion about essentially putting in social and economic policies conducive to the fertility rate going much, much higher. I think it's around about 1.41, the latest data on that. Replacement rate is 2.07 in Japan. You're miles away from that. And the long-term assumptions that the government itself makes in terms of population projections assume a fertility rate of 1.3 or so, depending on the assumption made, 1.3, 1.4, something like that. So if Japan really wants to increase its aggregate potential growth, not per capita, you could have a debate about per capita, but that's not the way that Abenomics is couched, then you really need to tackle those issues head on. But look, that's not happening. That's not where the debate is. But that doesn't mean that there's nothing in the third arrow. And in fact, if you look at the documents the government's produced, they're quite thick. There are a lot of things on the table. Some of the things that were talked about in the last year or so have already started to move, particularly the GPIF. And of course, one of the reasons that the stock market has rallied about 8.5% since the end of October when the Bank of Japan announced its QQE2 is because on the same day, the Government Pension Investment Fund announced the change in its longer-term portfolio asset allocation, dramatically reducing the allocation to JGBs and increasing the allocation to domestic equities and foreign assets as well. So that's already actually been decided. It's sort of that train has left the station. And so if you go through the structural reforms, there is actually a lot of stuff being talked about. Now, again, is it going to shift the dial dramatically? I don't think so. But I think it's also too simplistic to just say nothing is happening. So I think that after the election, my guess would be that Mr. Abe, once he gets the new mandate, will come out with a certainly a focus on breathing some life into the third arrow structural reforms, exactly which topics he picks up on, which battles he decides to fight, whether it's agricultural reform, whether it's energy reform, labour market reform. I'm not quite sure, I'm not privy to that. But I would certainly be surprised if something doesn't happen in that regard. And I think Mr. Abe has shown that he has a few tricks up his sleeve, and he's able to, from time to time, seize the momentum and surprise people. It's actually quite important that he does that. I mentioned that the equity market is up about 8.5% since the end of October on that GPIF and Bank of Japan news. But if you look at what's been driving the equity market in Japan since Abenomics started, or the discussion on Abenomics started back in November, December 2012, the equity market has been heavily driven by foreign investors buying. And foreign investors have started to come into the market again. They've bought, in cumulative terms, since the beginning of Abenomics, about 17 trillion yen, which is a huge amount by historic standards. And so it is quite important, even from a narrow domestic point of view, that the government keeps, doesn't certainly want to disappoint foreign investors to the point where foreign investors say, well, the equity market's up 80% or so since Abenomics started. Nothing much is happening now, a bit disappointing, take that money off the table. Because if domestic investors are not changing their view on the future and stepping in to buy those equities, we've seen time and time again what can happen in Japan. The equity market can fall very sharply when foreigners turn to net sellers. So the stakes are quite high here in terms of Mr. Abe, with a new mandate for 4 years, actually pushing through and continuing to deliver, particularly on these structural reforms, because that's basically all that is left to do. So my takeaway is, broadly speaking, both from a reflation point of view and from a structural reform point of view, this is a positive outcome, and certainly markets at the moment are taking it in that spirit. I think I went 1 minute over, so I'll beg your indulgence there. So happy to take questions now.
Thank you very much for that, Paul. A very broad and interesting overview of where Abe may go after Sunday. Yeah, we'll open the floor up to questions to the working media first. One question per person. Please state your name and affiliation, and no speeches. Who would like to ask the first question?
Thank you for taking my question. My name is Kaori Ida with NHK, Japanese Public Television. I was wondering if you could talk a little bit about our government debt, the JGB. We saw Moody's downgrade our JGB earlier this month. What would trigger S&P to downgrade our GDP? And taking a step back, we've been always told that the wolf will come. It will have to come eventually, i.e. the interest rates have to go up eventually. But we're seeing a very historical low. What do you think will trigger the change of tides within the market and which will lead to an interest rate rise? Thank you.
Thank you. I should just preface my answer by saying that anything I say here is as the Economist for Standard & Poor's, not speaking on behalf of our sovereign rating analysts who do their own independent analysis and really make those decisions about setting the sovereign rating. But more broadly on the JGB situation and the sort of fiscal outlook in Japan, I think I mentioned in my remarks that what I would see as the most important. Well, let me first of all say the numbers in Japan look pretty bad. Obviously, if you look at Japan's debt to GDP ratio, either in gross terms, which is probably something like 240% or so, or if you look in net terms, that is, you net out the financial assets that the government has, which would pay off some of that debt, it's still a very large number. That's probably of the order of 150% of GDP or something like that. And both of those numbers, gross debt and net debt, are substantially higher than other major developed economies. How did Japan get into that situation? Well, it got into that situation because it has been running large budget deficits for many years now, particularly since the 1990s when the bubble burst, and then particularly after Japan fell into deflation in the mid-1990s. And again, I alluded to this in my remarks, that I would argue, or have argued for many years, that sort of deflation in Japan is the sort of the flip side of a very poor fiscal conditions. That is, in a deflationary kind of economy, nominal GDP tends to be stagnant. Tax revenues, therefore, are very stagnant, falling. Government expenditures tend to rise for various reasons, partly because of attempts at fiscal stimulus. But of course, in Japan's case, you have this rapidly, well, not rapidly, but steadily aging population. Social welfare expenses are going up. So you have this sort of expenditures going up and tax revenues going sideways, if not actually falling from time to time. The difference between the two is the budget deficit. The budget deficit is a flow which gets added to the stock of debt every year, and so your debt to GDP ratio just goes up and up and up and up. So from that point of view, how does Japan solve that problem? Well, first of all, is it a problem? Well, it doesn't seem to be a problem at the moment, in the sense that the markets, the JGB market in particular, is not, unlike the Eurozone in the last few years, somewhere like Greece or Italy or Spain a couple of years back, the JGB market is not flashing a sort of amber or a red signal, not even an amber signal, of concerns about fiscal sustainability. 10-year JGB bond yields are around about 40 basis points at the moment. Obviously, they've been a little bit higher than that. But of course, that's no reason for complacency, because history shows that these financial fiscal crises can come out of nowhere. They may take years to digest, but markets can move much quicker than policymakers can respond, if the situation gets to a serious tipping point. So there's no room for complacency here, but this sort of situation in Japan of prolonged, chronic, mild deflation, chronic budget deficits, and then rising debt levels, and with that denominator, nominal GDP, acting against you as well, leading to these very, very bad fiscal indicators, obviously is something that policymakers need to be worried about and do something. So what do you do about it? In a nutshell, I would argue you need to do 2 or 3 things. And then the question is, what is the order that you do them in? The first thing you need to do is you need to get out of deflation. Mild inflation is a much better situation for doing fiscal consolidation than mild deflation. Then you need to obviously do something on the expenditure side, and you need to do something on the tax side. You need to get your expenditures under control. For example, with Japanese living longer and healthier lives, there are opportunities for people to have longer productive careers. That means that they're less of a drain on the public purse and also more productive contributors. So there's stuff you can do on the expenditure side, and there's stuff you can do on the consumption side, on the revenue side. For example, raise the consumption tax. And in Europe, the consumption tax in many European countries, where Japan seems to have a sort of broadly similar kind of social contract, some countries have got 20–25% consumption tax. So I think the Ministry of Finance looks at Japan's consumption tax and says, "Oh, 5% was too low. We can take that to 10%." But it's all about the timing and the sequencing. And I think that and really my main message today, I guess, has been that the macro policy mix of monetary policy and fiscal policy, both aiming to overcome deflation, is probably the most important first step towards achieving that longer-term fiscal sustainability. So I'm not going to talk about a trigger for a downgrade because, again, that's out of my purview. But our sovereign analysts will be looking at things like, what is the path of the economy, what is the path of deflation, what is the outlook for those budget deficits over a prolonged period of time. And do you have the right policies in place today? Do you have policy credibility to manage that process? You mentioned interest rates. Again, it's kind of one of that we're observing at the moment a worldwide trend of long-term interest rates, say 10-year rates coming down, even in the US, which is experiencing quite a strong recovery now. 10-year Treasury yields are about 2.3%. Many parts of Europe now, they're below 1% in Germany, Switzerland, places like that. Japan, 40 basis points. Even in the periphery of Europe, now Italy, Spain, Portugal, these countries have got quite low long-term interest rates. Mr. Draghi, the ECB president, convinced the world in 2012 that the ECB would do whatever it takes to prevent the euro from breaking up. Investors have bought that story and are not pricing any kind of breakup risk or default risk or not very much default risk, into those yields. So these low yields are a worldwide trend. Now, the other thing that's going on, of course, in the world is you have the four major central banks, the Federal Reserve, the Bank of England, the Bank of Japan, and the ECB, all having done massive quantitative easing or about to engage in quite large-scale quantitative easing. The Bank of Japan now, let me give you a number here. If you look at what the Bank of Japan is doing with its 80 trillion yen of JGB purchases per year, that's equivalent to about 16.6% of nominal GDP. The Fed, when it started its QE3 back in December 2012 and was buying 85 billion of government securities and MBS per month, on an annualized basis, that was equivalent to about 6.2% of nominal GDP. So the Bank of Japan is doing QE, if you like, about 3 times as aggressively as the Federal Reserve was, and as a result buying up essentially all the JGBs that are being issued and probably starting to eat into the stock of outstanding JGBs. So that puts a lot of downward pressure on interest rates. Your question was, what will be the trigger for interest rates to go up? I think the good trigger for interest rates to go up would be that those policies actually start to work. And in Japan's case, that means that Japan gets out of deflation. Inflation expectations go up to around about, say, 2%. And the Bank of Japan is able to start to do, sometime in the future, what the Federal Reserve is starting to do now, which is to lay the groundwork for a normalization of monetary policy, for interest rates, policy rates to come up, and for QE, for some sort of exit from QE. Now, the Bank of Japan is a long way away from even starting to discuss that scenario, but hopefully it will get there, and I say hopefully because it will be eventually successful with its policy objectives, which are to end deflation and to achieve a 2% inflation. That 2% inflation, if it's achieved, at some point must logically lead to the Bank of Japan reversing its policies and to interest rates going up. And some people might worry then about, well, won't that mean that the debt servicing costs in Japan will go up? Isn't that bad for the fiscal outlook? Well, that's true, but that can only happen if Japan gets out of deflation and nominal GDP starts to increase and tax revenue starts to increase. So there'll be offsetting factors here, which will mean it's not just a one-way kind of bet. So I think hopefully that gives you some view of how we see things.
Very comprehensive answer. Who else would like to ask a question, please?
Masaki Yamamoto from Bloomberg News Tokyo Bureau. Japan has a target to achieve primary balance surplus into 2020. The first question is, how do you see the chance that Japan achieve that target? The second question is the delay of sales tax. Do you think the delay of sales tax has a negative influence in terms of achieving that target for Japan?
I wouldn't really want to pinpoint the date at which the primary balance goes into surplus. And I, frankly speaking, wouldn't personally put too much weight in those dates per se, because if you know Japan's history in this regard, if you go back to the Koizumi Takenaka era, for example, the government had targets then to achieve primary balance much, much sooner. And so typically the dates to achieve primary balance have been pushed out and pushed out and pushed out. So 2020, whether it's achieved in 2020 or not, I'm not sure. I think the more important point is, the way I would look at it is more from the viewpoint of, are the policy settings coherent? I was living in Japan back in the early 2000s. I was probably one of the few people, it wasn't with S&P at the time, but I was one of the few people that was quite critical of the Koizumi Takenaka policy mix, because while some of the targets looked good, the policy mix was not a coherent policy mix. I won't go into all the details of that, but it didn't really add up to a coherent policy mix. I guess what I've been sort of one of the messages today is to say that, I wouldn't say for the first time, but close to the first time, the macro policy mix in Japan looks pretty coherent. You have a central bank that is communicating to the markets and to the public that it is absolutely confident that it can end deflation, that it is determined to do so, and it is taking action, quantitative easing, qualitative easing, which is consistent with that message. That's a revolution. I call it a Copernican revolution compared to the Shirakawa Bank of Japan that was just in existence 1.5 years ago. So monetary policy is in full-fledged end deflation mode, and I think is doing the right thing. On the fiscal side, then the question is, does the government have the fiscal policy settings correct? Well, if you go back to Abenomics and look at the Abenomics manifesto of December 2012 that Mr. Abe went to the election on, that wasn't actually calling it first, second, third arrows then, but if you read that document, basically it said that the fiscal stance should be flexible. The Japanese word, I think, was kidoteki, for 2 to 3 years. 2 to 3 years. So that takes you out to 2015, basically. 2015 even into 2016, because this was the end of 2012, in order to support the economic recovery. So that, from that point of view, hiking the consumption tax twice in that 3-year time frame didn't really seem consistent with an objective of ending deflation. Now Mr. Abe has said, okay, time out. We're not going to hike the consumption tax until April 2017. Maybe he's not putting it quite this way, but I would read it as saying, we're going to make sure that fiscal policy does not get in the way of the Bank of Japan doing its job, which is to end deflation once and for all. Once we get to 2017, deflation should be over. The Bank of Japan should have achieved its 2% target, and it will be in a completely different situation now of preserving 2% inflation rather than trying to achieve it. And that's much easier to do for a central bank. So you asked specifically about the delay in the consumption tax. Obviously, if you hike the consumption tax, whatever consumption spending that is taking place, you're going to take in more tax revenue. And tax revenue this year relative to last year, particularly consumption tax revenue, is up about, I think, 40% year on year. So definitely you can get more tax dollars coming in the door if you change the tax system. But if that is also having a side effect of pushing the economy back into recession, keeping it or at least at a very low growth rate, and preventing that broader macroeconomic process of everybody believing that deflation is ending and therefore changing their consumption behavior, their investment behavior, then you're not really going to achieve the end result which you want. So I think that the way that I would look at this is more in terms of the sequencing, of getting the sequencing right, of making sure that the consumption tax hike, which ultimately will be good for the government's tax coffers, is coming at the right time in terms of the economy already having got onto a path of nominal GDP growth. And as I said before, it's not there yet.
Thank you.
I think that's one.
Stanley.
Yeah, Stanley White from Reuters. I just wanted to ask a question about deflation in other countries. One of the reasons why is I've been reading stories recently about people concerned about deflationary risk in places like South Korea or mainland China or Sweden or Europe. And also, there are some other stories that suggest that there are some concerns about household credit growth or consumer credit growth in some of these economies. And do you think deflation could become more of a global story next year? Or do you think some of these countries that I just mentioned, or regions like Europe, could actually fall into deflation? And if so, what impact, if any, would that have on Japan's battle to stay out of deflation? Thank you.
I don't think at this point in the global economic cycle there's a big risk of deflation as some sort of global phenomenon. Now, if you go back to 2009, when the global economy was in the midst of the worst recession and the worst financial crisis since the Great Depression, there was a lot of concern about deflation. And that's essentially why you got the response that you got from the Federal Reserve and Bank of England as well. Particularly the Bank of England and the Federal Reserve were very quick, really straight after the financial crisis. Initially with lender of last resort measures, they expanded their balance sheets, particularly the Fed, dramatically, to stop the financial crisis, the financial system from collapsing. One of the things they were trying to prevent was a collapse of the financial system, a Great Depression, and deflation. So central banks and also the banking authorities, the treasuries, were successful in stopping that from happening. Now we're 5-6 years into a recovery, and certainly in the US, nobody's talking about the deflation risk. That was the big concern 4 or 5 years ago. Could the US follow Japan and have a kind of deflationary outcome? You didn't mention the Eurozone. One of the big, you mentioned Sweden, but one of the kind of big concerns at the moment, or in the last few months, has been, could the Eurozone slip into deflation? Headline inflation in the Eurozone is about 0.3. Core inflation is about 0.7, well below the ECB's inflation target of a little bit below 2%. So that's, at the moment, I think, a risk, and that's because of that risk, we're seeing a fairly dramatic policy shift from the ECB, which began in June. They introduced negative interest rates, a rather novel concept, cut interest rates and also introduced the negative interest rate. And then in September, the ECB announced essentially that it was going to start for the first time to expand its balance sheet in a kind of quantitative easing fashion. And then in November, they basically put more details on that and are now saying, in fact, the latest meeting just the other day, essentially step by step moving towards much more of a fully fledged quantitative easing regime. And the ECB is essentially saying now they will expand their balance sheet by 50% over the next 2 years. Not as aggressive as the Bank of Japan, probably not as aggressive as the Fed, but compared to what the ECB has done in the past, it's sort of off the charts, sort of aggressive. I mention all of this because the way that economists think about these problems is to fall into deflation, you need to make serious policy errors with particularly monetary policy, fiscal policy, or banking policy. And as long as policymakers are aware of the situation, are prepared to take determined aggressive action, they shouldn't really experience deflation. That doesn't mean it can't happen in the isolated countries. Sometimes Sweden, Switzerland, Hong Kong have flirted with deflation or had, a few months where there has been a headline deflation. But as a phenomenon like Japan, where the economy slips into deflation and stays there for 15 years or so, that looks to be very unlikely. The modern theory of this essentially says the most important variable for inflation or deflation is the public's expectations of future inflation. It's a kind of circular logic. If the public are expecting deflation, and the public includes corporate managers who have to pay wages and set wages, and labor unions that bargain for wages, if the public expects deflation in the future, and the central bank doesn't, in some sense, intervene to overturn those deflationary expectations, deflation will continue. On the other hand, if the central bank can achieve a situation where the public is expecting, let's say, 2% inflation, then that's a much easier situation to sort of maintain and protect. That's why you hear Mr. Draghi, for example, talking, or most central bankers talk a lot about inflation expectations. So the rhetoric from the ECB at the moment is to say, yeah, headline inflation has fallen, but inflation, longer-term inflation expectations remain well anchored. But the moment they start to see the public's inflation expectations coming down, that's a big danger sign. And that's essentially why the ECB is moving so aggressively at the moment.
George.
Good afternoon. My name is Baumgartner from Swiss Television. I would like to ask you on Monday, the day after the election, do you think the markets will continue to let Mr. Abe or Bank of Japan to print money without implementing structural reforms, without making a decision about TPP or a free trade agreement with EU? And do you think Japan can solve its problems long term without reforms?
Well, far be it from me to try to predict what the markets are going to do, in the very, very short term. Nobody really can predict markets, and they often wrong foot people. But to focus a little bit more on the substance of your question there. You mentioned printing money and structural reforms. Essentially, there are the two. I like to talk about Abenomics as having two pillars. One is ending deflation with macro policy, and the other is implementing structural reforms to improve real growth potential, or potential growth. And both, I wouldn't use the word printing money necessarily. That's a little bit of a loaded term, although it's, quantitative easing. A lot of people say, well, isn't that printing money? Because what is quantitative easing? Quantitative easing is the central bank buying assets which it pays for by printing money. But the printing money is by creating what are called excess reserves, which are deposits that banks hold at the central bank. And this is part of what economists call monetary base. But this is not the same thing as what Milton Friedman called helicopter money. Remember, helicopter money was the idea that basically one way that the government could stimulate an economy and get out of deflation would be to send helicopters over the city dropping dollar bills. Think of it as you wake up in the morning and you go to your letterbox and there's $100,000 there stuffed, or your bank account has been credited with $100,000. Then that's a net addition to your paper wealth. You're going to feel wealthier. More money exists now. You start to spend that money. You have more money chasing the same amount of goods. You get some inflation. That's sort of helicopter money idea. But quantitative easing is not helicopter money. Quantitative easing is a dollar for dollar or a yen for yen transaction. So when the Bank of Japan, for example, buys those 80 trillion yen of JGBs, it creates $80 trillion of central bank reserves. It takes $80 trillion of JGBs out of the market and supplies $80 trillion yen, sorry, of another kind of government money. So the net injection of purchasing power to the economy is actually zero. People give up their JGBs and they get a bank deposit in return. So then you might say, well, why would they bother doing that? Well, it does have some financial or monetary easing effects through various mechanisms, and therefore it's worth doing. But it's not really printing money in the classic sense. But you also asked about structural reforms. I think the big message of Abenomics is, and if you compare this with government policy and monetary policy pre-Abe, if you go back to the Shirakawa days, the Bank of Japan and the government kind of implicitly agreed with this. The premise of policy in Japan was that it was impossible. This is what the Bank of Japan was telling everybody. It's impossible for Japan to get out of deflation without doing structural reforms. In other words, structural reforms were what was needed in order for monetary policy to work. I don't have time to go through the debate here, but suffice it to say that's a very unorthodox, heterodox theory that economists typically would reject. But that was the premise of monetary policy and policy in Japan, that if the government did sufficient structural reform, then Japan could end deflation. Well, that was a very fatalistic view because, frankly speaking, the amount of structural reform that you would need to do on that logic would be quite a lot, and you can't do structural reform quickly. It takes a long time. So basically, that was a view that gave the Bank of Japan a self-assigned excuse not to be aggressive with monetary policy, and basically consigned Japan to be in long-term deflation. One of the parts of the Copernican revolution of policy in Japan is that Abenomics has separated what the Bank of Japan is doing with its money printing from what the government is doing with structural reform. In other words, Mr. Kuroda is saying structural reform is a good thing, the government should do it, but I can do my job regardless of what the government does. In other words, the two things are now separated. So again, I think from a policy coherence point of view, the best outcome is the Bank of Japan and the fiscal authorities being focused on ending deflation and the government being focused on structural reform. But one is not held hostage to the other anymore. Now, what's going to happen the day after the election? As I said in my remarks, I don't have a crystal ball to say, oh, they're going to announce X, Y, or Z. But to me, again, if I put myself in Mr. Abe's shoes, and I've surprised the world by going to a snap election, and I've got a strong mandate for Abenomics, and the Bank of Japan is taking care of Arrow 1, and Arrow 2 has been dealt with the consumption tax legislation decision, there is only Arrow 3 left. And if I'm Mr. Abe and I'm trying to become the third longest serving prime minister in post-war history, which he will be if he serves for 6 years, and I want to live up to the expectations that I've created, not just in Japan, but internationally, I think I'm going to have a little bit of a strategy up my sleeves to come out with a program which breathes renewed life into the third Arrow reforms. Again, is it going to be TPP? Well, you mentioned TPP. The problem with TPP is it takes two to tango. That is, of course, that the US in particular, and the US Congress in particular, essentially needs to give Mr. Obama trade promotion authority and essentially allow him to negotiate the TPP agreements. And then Japan can also come to the table. But again, if I was Mr. Abe, I mean, I would be quite aggressive there. I would be pushing the envelope a little bit and perhaps giving a little bit more ground and being prepared to give more ground, because TPP would be a very good result for Japan. But unfortunately, it's not something that Mr. Abe can do unilaterally.
Do you have time for one more quick question?
I think so.
Tom.
Thomas Sullivan, Paul, thank you very much for that. You talked about raising nominal GDP, and of course one important aspect there is exports. So I'm just wondering, where do you see, on the international scene, where do you see the ability for Japan to actually increase exports? And just quickly, on the cost side of government expenditure, what do you think Abe's options are there? Is he looking at social security cuts, for example? Some countries have raised pension age, etc. And as you said, he has a long runway to the September 2018. Thank you.
Yeah. So just on the export side, there's been a lot of commentary that the yen has weakened and Japanese exports haven't really picked up very much. And why is that? Well, Japanese companies have transferred a lot of their production facilities overseas, so even if the yen weakens, they're not really in a position to increase their exports. There's probably a germ of truth in that kind of description, but to an economist, it's a sort of a non-economic argument in a way. There's no doubt in my mind that the yen has weakened now by about 50% from where it started. Now, of course, it had already the big overshoot to get to the high 70s, but it's moved now to 120 in these two big moves. The latest one still sort of the ink has hardly dried on that latest move. It will take a little bit of time for that to seep through into the economy, but there's no doubt in my mind that this much weaker yen is going to provide a strong boost to exports over time, and that will start to filter into the domestic economy. It also means that the import competing industries, will get an advantage as well. One of the import competing industries is domestic tourism. You will find, at the margin, more Japanese will stay at home than go overseas because it's so expensive to have a holiday overseas now, and a lot more foreigners will come to Japan because suddenly at 120, 125, things look pretty cheap in Japan. That is also that's also essentially an export of tourism services. So now where will those exports go? I mean, the good thing about economics and being an economist is you don't actually have to worry about that. What you know is it's going to happen somewhere. Economic, demand curves slope down. But I think that Japan will be able to export to the US. Obviously, we expect US growth to be about 3% next year. That's a step up on. It's really been running about 2.2% for the last few years. So if the US steps up to 3%, Europe dodges recession, which we think it will do, and grow about 1%. China, we think, is going to grow about 7%. So again, that's off a bigger base. It's a lower growth rate off a bigger base. But the global economic environment, while not completely benign, is pretty good. So this weaker yen, I think, gives a pretty good boost. But it may take a year, it may take 2 years. Yes. Again, monetary policy famously takes, operates with a long lag. And then you asked on the expenditure side. I'm not in Japan. I'm not following the debate day by day, blow by blow, as I used to. But it does seem to me that one of the areas that sort of just has not got enough attention in the policy debate in Japan, it's sort of taken for granted almost as a starting point that the existing social welfare expenditures that's a social contract that needs to be maintained. And then the question becomes, the population is aging, adding, 1 trillion yen per year to expenditures. How do we pay for that? There is another way of approaching it, which is to say, do the current sort of benefits actually make sense? And again, you mentioned, I think, the retirement age. This is not just the Japan issue, but people are living longer and healthier lives. And if oftentimes people, if they're able to, would actually like to stay in the workforce for longer. Abenomics has talked a lot about womenomics and raising the labor force participation rate. But I think that a serious debate about increasing the labor force itself, because often the labor force is defined as working age population up to 65. Maybe we should be thinking about that. People are living to 85, maybe 15 years of retirement's enough. So is a retirement age of 70 really that incredibly a bad a thing? Maybe you don't make it compulsory, but you make it much easier for people to work longer. And that that has a great benefit because if you work longer, you are, by definition, the amount of time that you're drawing on the public purse is less, but you're also contributing. You're a productive member of society. So you get a sort of a double leveraging in that respect. Now, whether Mr. Abe is going to raise this issue or not, I don't really know, but it seems to me, not just in Japan, but around the world, but particularly Japan, because Japan has got almost the longest longevity in the world, yeah, it's an obvious debate to have. But I think, you know, if I was a politician, I would be couching it not so much as I'm taking away one of your benefits, but, you know, congratulations, you're living longer, you're living healthier, you know, let's think about creating a society where you can actually have a more productive, you know, twilight of your life. I'm not necessarily saying I'm volunteering for this, but who knows.
Thank you very much, and thanks for volunteering at least 10 more minutes on this event. Very profound insights, and there's only really one thing left for me to do, and that is to give you another year's honorary membership to guarantee you'll come back. Thank you very much.
Thank you. Thank you very much. Wish I was in Japan more about business.